Okay, so it's 5 o'clock. This time I'll ask for a roll call of attendance.
Commissioner Stinnett? Here. Commissioner Carver? Here. Commissioner Lewis? Commissioner Kaler? Commissioner Caskey? Jeff Hedrick? Here. Phyllis Crisp? Sheriff Brong? Here. David Merle? Here. Mayor Mitchell? Here.
6 present, we have a quorum. This time I'd ask for the emergency announcement to be played, please.
Before we get started, let me read the emergency evacuation procedures. In the event of an emergency evacuation, an alarm will sound. Everyone should exit the building by way of the nearest stairwell in a safe and effective manner. If the nearest stairwell is blocked by smoke, use the other stairwell. Do not use the elevator. Once you have reached the main floor, follow the exit signs to exit the building and quickly proceed away from the building. Please be mindful of others evacuating and of emergency vehicles.
At this time, I'm at the chair because the chairman and vice chairman are both absent. The chair will stand for nominations for chairman of this meeting. The floor is open for nominations.
I nominate Commissioner Tom Stinnett.
Commissioner Stinnett, is there a second? Who said? Hedrick seconds. Are there other nominations for chair of this meeting? Chair will entertain a motion to close nominations. Sheriff moves to close nominations. Is there a second? Commissioner Carver seconds. All in favor of closing nominations say aye. Opposed say no. Be a roll call vote. When your name is called, say Stinnett.
Commissioner Stinnett? Commissioner Carver? Mike Lewis? Commissioner Kaler? Commissioner Caskey? Jeff Hedrick? Phyllis Crisp? Sheriff Brong? David Merle? Mayor Mitchell?
Chair asks Commissioner Stinnett if he'll change his vote to Stinnett. Okay, we'll have to have a majority, and 6 is a majority. Commissioner Stinnett, you're in charge.
You
really should.
That's his slide. He likes that. Thank you.
You will.
Thank you for.
Thank you.
I got it. Thank you, sir. Well, I guess we need to do the emergency announcement. We did that. I was sitting over there talking. We'll look at input and items from on the agenda that the public may have. No one? Approve of the June 21st minutes. Got a second? Discussion? Anyone got anything? So I guess we approve that. Revenue. All in favor? Yeah, excuse me, guys. Hey, nobody wants to talk about it. It's approved. Everyone that approves this, say aye. Here we go. The, Jeannie, expenditures? I don't even know how to do that, honey. Right here?
Yes.
Right.
Next one.
This one here.
There you go. See, you got it. Thank you very much. Okay, he did. Revenue and expenditures for this month is included in your packet. We will start with excuse me, with the membership report and our employee summary report, we were down in the month of June a little bit. Total of from July of last year, we're down 192 total members. But you can see the total employee count is 1,722, and we have 3,702 covered lives, so that includes all of the dependents on the plan. As we move to the revenue and expenditures piece, you will see that for the month of June, we had $145,316.26 more in claims than what we had in revenue, which is a recovery from the month before. We had almost $600,000 more in claims in the month of May. So improved a little bit on June, still down, but it did improve. Just a note for you, we did receive actually in the mail yesterday a check from Employers Health, which is the coalition that we joined in order to receive the discounts from CVS Caremark on the prescription side. We did receive a prescription rebate check from them yesterday in the amount of $123,330.10. So that's quite a nice rebate in prescriptions, and that kind of broke down, just to kind of help you understand exactly how that was handled. Is they looked at 68 mail order prescriptions and 1,982 retail prescriptions, 36 maintenance choice prescriptions, and 51 specialty type prescriptions. And so you're looking at over 2,000 prescriptions for the first quarter of 2016, yielded $123,000 worth of rebates. So that's a very good excuse me, very good thing. And then we also received notification from Humana that we will be receiving a check for some financial recovery items in the amount of $40,176.08. We do not have that one yet, but they've notified us that it's on the way. So you're looking at over $150,000 worth of rebates that'll be coming back to the county.
Questions?
The rebates from Employers Health and CVS, yes, that was for the first quarter. Do you remember what for Humana? I think that was just for the month of July, wasn't it? The amount from Humana was just for the, for the month of June, probably. Was for the month of June, and they notified us in July that we received that, so.
Anyone else? Hi.
No,
I got promoted.
Did you get her? Okay.
I wish you'd have been here.
Maybe she was late on purpose.
Smart lady.
Anyone else have any questions? Okay. Well, Mr. Harris, would you give us a little update? Let me see if I can figure out how to do that. There we go. Good. Slower.
Thank you, Chairman. I'll go into this, and if as you went through the revenues and expenditures, if you calculated up the amount that Jenny mentioned that we're getting in rebates and refunds compared to the losses of this month, basically we're actually ahead instead of negative for this last month. So I think it's going quite well. And to mention with your question about the time period, with it being just a quarter, and everything pays off in arrears, so you'll find that you'll get a few more of those rebates on the pharmacy side, and then you'll get 2 rebates basically in the first quarter of next year to account for all of for the full 4 quarters this year. So it'll work out, but yeah, the rebates are going strong with the CVS Caremark. So today we're going to give you an update on the audit with Humana, go through a little bit of the biometric RFP process, and then I was at the meeting in Nashville last Thursday on the local education and local government committee meeting, and so there's some interesting things come out of that you all should just be aware of. And then the requested items for vote will be on the rate structures and then the tobacco, non-tobacco rate structure. So first of all, on the Humana audit update, this is already outdated based on what Jenny had just mentioned. To date, we've received around $23,000 in recoverable funding based on the audit. Add in an additional 40,000, we're close to 60 some odd thousand in recoverables through the audit. Again, if you recall, last year the overall cost was around 40,000 plus travel expenses, so you're looking at $40,000 to $45,000 in total cost for the audit. So this is good news. It means that we've made back the money that the overall cost of the audit. So you're not negative and you're actually positive. On top of that, we were able to discover some procedural issues within how the plan operated that should save significant dollars in the future, and we're still in negotiations on another claim outstanding or a claims topic outstanding that if we're able to succeed, it should boost that number quite a bit. So we're not finished by any means. We probably have another 5 months or so, 4 or 5 months until we have finality on it. But so far, so good. This, I'd say, Jenny, you can comment otherwise if you believe so, but I'd say HMS has been a very good partner to work with. They've been very, very structured and very organized in every step of the way, and they set deadlines from the beginning, and they've hit every single one of those deadlines. If they needed to make an adjustment for an outside reason, such as a snowstorm in Kentucky, then they kept us very much in the loop. So they've been a very good partner through this process. Next up is on the biometric RFP. Also, please feel free to ask questions as normal during this if you have any. We have our wellness coordinator here, our well-being coordinator here, Amy. You all have met her a few different times back here. And then we also have Lisa Johnson, who's our account manager, that will work with you all as well during this wellness initiatives, as well as some other initiatives as we go through. So Amy's already begun the process of creating the RFP for you all. We have a full database that she's able to go through our national database. And then she's already met with Blount Discount as well as a few other local vendors that we'll reach out to make sure that we get pricing from our local partners here and try to keep it local as much as we can for you all. We'll go through and she's going to assess the needs and interest of the county and then the employees, develop the RFP questionnaire so it'll be fully transparent. And then with many different metrics to suit the needs of Blount County. We'll have the proposals outlined and compare them side by side, demo all the products to make sure that they're what we need for the future outlook of the program, conduct interviews, also get some references, and then bring the top 3 to Blount County for the determination. So we'll allow you to choose, but this way you're not having to weed through 20 different proposals and determine what makes the most sense. So we'll be able to bring that and then make our recommendation as well, but to what you need. Before that period of time, we would have negotiated all the pricing down to the lowest number that they can do it for. And then as the process moves forward, we'll assist with implementation, continue to do the ongoing evaluation, determine if this is a vendor that you need to continue with after the 2017 period. Any questions on this part with the RFP process? Again, this is for voluntary biometrics. It's not required, but it would be for what we had anticipated an employee discount for 2018, for January of 2018 for the biometric piece. The next piece is on the local education committee. This is where you all received a handout whenever you came in. If you want to refer to this handout, this will be the first one that we'll look at. And this, I only printed off the local education portion of it for the actual costs, which we'll get into in a minute. The local government, as you may be aware, when we discussed last year, the local government costs are actually significantly higher than the local education. So while the local education rates are a little bit high, the local government is that much higher. It's based on region. So the way that the state is doing it this year, and we discussed this also last year, with the recent EEOC changes, they made requirement changes to how the wellness plan works or the partnership plan. Previously, to enroll in the partnership plan, you had to abide by specific wellness criteria to be able to enroll. The new EEOC regulations state that you can't have coverage contingent on a wellness criteria and also offer a discount in the same product or fashion. So their plan was out of compliance on the state level. To address that in January, they are no longer requiring you to abide by the wellness activities to be able to participate in the partnership plan. But if you do abide by those wellness activities, you'll receive what they claim to be a $50 discount on the individual rate and $100 on any dependent type coverage for that wellness criteria. What that really means is they've just increased the cost and then brought down to the $50. So it's really just, you'll see that the non-wellness partnership plan is significantly higher than it was last year. So that's kind of where that smoke and mirrors is on that. Overall, there was a rate increase across each tier, and there's also some plan design changes. So the plan design changes, you'll see the first page is a 2016 plan. The second page is going to be the 2017 plans. So the wellness, the actual plan design itself for the partnership is going to be the same, whether it's wellness or non-wellness. The difference is going to be the main ones. The deductible increased slightly. So the partnership plan is going from $450 of a deductible in 2016 to $500 in 2017. The out-of-pocket maximum structure also changed. So in 2016, it was a separate out-of-pocket maximum for the medical of $2,300, and then a separate out-of-pocket maximum for prescription coverage of $2,500. So in reality, your out-of-pocket maximum under the partnership plan was $4,800 if you met both. Now, the likelihood of you hitting both the pharmacy and the medical out-of-pocket maximum isn't as great because a lot of people either have a lot of drugs or they're in the hospital for some major conditions, at which point those are provider-administered prescriptions, which are going to fall under the medical claims, not necessarily the pharmacy. So you may hit your out-of-pocket max on the medical. So that was a $2,300. Under the 2017, they combined those two maximums, but they lowered it from a combined level to $3,600. The negative for someone under that arrangement is if you're in the hospital, you're all of a sudden going from $2,300 to $3,600 for that. Also, the emergency room jumped up. It went from $125 to $150. The other big change, and they skimmed over this change, but I think it's going to be a much bigger change than what they're giving it credit for, is the x-ray and lab work. The x-ray and lab and diagnostic testing. So anytime you go get blood work done at the doctor visit, currently that's all covered with your copay under the partnership plan of $25 or $45. Next year, you will have to pay that copay for the doctor visit, but then also on top of that pay the coinsurance for that lab work. And next year for the partnership plan, that'll be 10%. For each of the other, for the standard plan, it'll be 20%. And then for the limited plan, it'll be 30%. So under each one of those, you'll pay coinsurance on top of that copay. So that's going to be a pretty big change for those folks. And I don't know that they're anticipating that. The prescription coverage is also the other big change that I noticed. The generic drugs go from 5 to 7 for a copay. The brand go from 35 to 40. And then the non-preferred drugs go from 85 to 90. The bigger change is going to be that they did what we did this past year, which is add a specialty tier to the pharmacy. So now they also have a specialty tier for prescriptions on the partnership plan of 10%. So the employee will pay 10% up to a maximum of $150 for specialty drugs per month, whereas before the most they paid was $85. So that'd be a jump for them at that point. You'll notice the standard plan is going from an $800 deductible to $1,000, and then the limited plan goes from a $1,200 to $1,600 deductible. The out-of-pocket maximum, though, on the standard plan went from a $3,000 to $4,000 out-of-pocket max. The emergency room went to $175 from $145, and then the prescription drugs also went up accordingly, as did the other plans, and same with the limited. The health savings account, they're obviously trying to put more of an emphasis on there, but there's very minimal enrollment currently in the HSA plan. There's likely to be even more minimal. The most significant change, though, is right now the limited plan. A lot of local education committees or boards had it to where they offered a gap plan on top of the limited, and then the local government, the education board paid for that gap plan. So when you added the limited plan plus the gap, it was actually less expensive than the partnership plan, and it was more coverage. The state has done away with that as far as being allowed to offer that gap plan for 2017. So the limited plan no longer can offer secondary coverage, and the state is going to be asking for verification of all the additional coverage lines, which we'll have to do this upcoming year of showing all the other coverages allowed. But we won't have to, I'm sorry, because you're not on that. But all the other local educations will have to do that. We will have to show just all the coverage levels just as far as confirmation. What this has created as a net effect, if you go to the next page, is going to be a pretty significant increase for some of the plans, most notably the limited plan. Across the board, the partnership plan, from my calculations and recollection, I want to say is a 6.6% increase on the partnership cost. The limited plan, though, jumped 23%. Now, the state did announce they're increasing on an aggregated basis the BEP funding by 6.1%. So there will be an increase in the BEP funding. But when you look at the overall premiums, the 2000 and on this last document, you'll see it side by side showing the 2016 to 2017. And it shows, the non-wellness cost for the partnership. In 2016, the partnership was $541 for an individual. The non-wellness partnership plan, which would be equivalent to you all not doing wellness, would be $621, so far greater in cost than what you're currently at. The one that really jumped out was on the family rate. For the non-wellness, would go up to $1,583. And then for the family rate for the wellness would be $1,483, and the individual is $571. The standard plan is also a little bit higher, and then your limited plan jumped up significantly as well. So you might find that some of the employee child rates might be a little bit lower than where we're at, but the family and the individual coverages are quite a bit higher than where you're at currently. So, and you're going to have some restrictions with the plan design. So I thought this would be good information for you to see on where it's at on the state level. This is greatly impacting a lot of the different school boards, and so I've been in communication with some as well. I would anticipate that there will be some steerage away from the state plan this upcoming year. It might be a little difficult this year with how late in the game there, because it's already July and it takes some time to do it. But we do anticipate there being some exiting out of it. I've also included the updated evaluation policy on the plans. The only thing that really jumped out at me on this one, it's almost the same. It's in comparison to the partnership plan. They did specify that you can have as many plans as you want, just that only one plan has to meet the partnership plan, which we already knew since we went through this already. The newest part was they also have a floor now. So they're saying for your lowest plan, so you have to have one plan meet the partnership. A secondary plan, if you offer 2 or 3 or 4 plans, can't be worse than their worst plan, which you all are far greater than their worst plan. So you have no worries from that side of it. We have went ahead and sent to the state for approval for your 2017 plans. But in confidence from one of the representatives at the state, they said, well, our plan went down in value and your plan stayed the same. So I'd say you should have no issues in being certified. I obviously asked for official certification, so we should have that hopefully within the next couple weeks, depending on their backlog. It's quite likely that with some of the changes to deductible, pharmacy, and coinsurance, that both your plans might exceed the partnership level value. So. Okay. Let me pull it.
Well, at the last committee meeting, we discussed the possibilities of establishing the non-tobacco rates for our benefit plan offerings, and we decided to bring that to this meeting. But one of the things that we talked about was the fact that we would need to approve a tobacco use policy that would cover the use of tobacco products and how that applies to our employees. So that item is in your packet. There is a draft policy. I don't know exactly what page it's on. Let me find. It's page 8. It's right after the revenue and expenditures in the packet. Should be pages 8 and 9. And it basically just describes exactly what is considered a tobacco product, what the procedures would be as far as how we would communicate, the policy to the employees, the fact that we would offer assistance to any employee who would want to quit smoking by giving them access to the smoking cessation programs. And then if there is a violation of the policy, that would be handled through disciplinary procedure. An incentive for non-smokers is discussed, and then there's also a affidavit at the end, which basically during the open enrollment process, employees would be asked to attest to whether or not they are a tobacco user, and proceed through the process that way. So that's the policy in front of me.
Is the floor open for question? Okay. On average, if a employee is a tobacco user, what percentage increase over a non-tobacco user do they pay?
Are you referring by industry, or are you specifically
Well,
for what we're proposing?
When we're talking about this proposal here, it says here that if they discontinue the use of tobacco, that it'll decide whether they qualify for the rewards or a discount. I'm assuming that means they'll be discounted down to an employee that's not using tobacco. So
Right.
how much would they be paying above what an employee not using tobacco is paying for their health care?
Yeah, so that's actually leading into my portion of the presentation.
Our thought process behind this was to approve a policy first, because we would have to have a policy to administer how we would proceed with basically determining if you're a tobacco user or a non-tobacco user. And if you say you're a non-tobacco user, but you do use tobacco products, how do we handle those types of things? And then we could set the rates, because that's the later part of the meeting. On the next couple of items on the agenda is setting that rate structure, and before you will be a proposal on non-tobacco and tobacco rates. So at this point, really, it's just to establish a policy, because we don't currently have one. And so we would have to have a policy in place to be able to administer that.
Based on what you know about this, you've looked at it obviously more than I have. What type of revenue are we looking at generating or offsetting? I guess it goes on average of employee coal. Is that, I mean, you got a number there?
Yeah, so we created a few different scenarios based on that, and either way, the way that we're structuring it towards an actual, during the last HR committee meeting, it was requested that we come back with various scenarios on making it more of a discount instead of for non-tobacco users, and not necessarily penalize as much on the folks that are a tobacco user. So in each of the scenarios, it will likely be a negative in the funding, because we aren't anticipating a huge influx of tobacco users on the rates. Because while you might have a tobacco population, we would expect that those that stated they're a tobacco user will likely either go through the steps and processes to keep non-tobacco rates, which involves a tobacco cessation course and those steps. So. I would like to defer to Amy on that part. Yeah.
Hi. Tobacco users there's a lot of different studies, but approximately cost $4,500 to $5,000 annually more than a non-tobacco user. Mm-hmm. Yeah.
What percentage of population, I guess what I'm trying to get, I mean, say we have, how many people, 1,800 on this plan, 2,000? Based on statistics, what percentage of that 2,000 round figure Blount County employees will use tobacco?
Well, local statistics are around 25%. Yeah, so we could estimate that 25% of your employees use tobacco. Okay. Yeah. Well, yeah.
And we have it broken down on the chart whenever we get to the tobacco rate side of showing how many people you would have to have as a tobacco user or a non-tobacco user to break even basically on the tobacco discounts versus the regular. So you can see that chart.
Can I ask some questions? Spouse or the children, does it address that in this? Will they pay, will it just be if the employee is a tobacco user, they will pay more of a premium, or what if the wife or the children are tobacco users?
This year, we set it up to where it's just based on the employee smoking. But that's not to say that in the future you might not want to, you may want to consider spouses and so forth. Obviously, if you have an employee that is a tobacco user, it would have, but the employee has a family rate, then obviously it'll affect the family rate for the tobacco, non-tobacco.
So on average, if our employees paying $85 for their insurance, if they were a tobacco user, what would they pay?
The tobacco for that, the way they have set it up, on each of the scenarios, we have it to where the first scenario is a $5 discount if you're a non-tobacco user. The second scenario would be if you're a non-tobacco user, would be a $5 discount. The tobacco user would be a $5 surcharge. And then the third scenario would be a $5 discount and then a $10 surcharge. But I think that this policy isn't outlining the actual discount. It's just stating that there would be a discount in place, but not specifying what that discount is.
So if we did this, none of this would go into effect. It would go into effect whenever we voted to, or whenever the commission voted to put it into effect.
Yeah, I think Jenny has on there the January 1st, 2017, but I think that can be changed. So, absolutely.
I'd like to make a motion that we implement the tobacco policy and make it effective January 1st, 2018.
Second.
I just want to make sure, I want to repeat it back and make sure we have it right for the minutes, okay? So what we had in the policy was that this would take effect January 1st, 2017. And Mayor, you've made the motion to change that to say January the 1st of 2018.
Yes.
Thank you.
Can I ask one question on that?
Before I vote, I want to make sure I know what this is. So you get we're paying $85 a month right now, right? So the person who doesn't use tobacco will go to $80. It's
Well,
a
that-
$5 discount, right? Not
That is one option that we
Which
are.
option are we voting on?
Well, we're not voting on any options right
I'm
now.
sorry, I'm sorry.
We are only
Voting for-
voting to
Okay,
establish
okay,
a
all right.
policy. Yeah, we are only voting right now at this moment to establish a policy, then we'll set the rates later.
And if this vote passes, it won't even go into effect until 2018.
18.
So it'll be another year and 6 months.
Yes, to discuss the rate.
Yes.
Correct, yes. That's fine. That's okay.
That was going to be my question. Why do you want to move it to 2018?
Because I think we need to have to take a pretty serious look at what the rate is going to be. Who gets the discount? Who gets the penalty? How much is it? I don't think it's, I don't think we're ready to make that decision between now and, you've seen how long it's took us just to get to this. December 31st is the way time's going, Rick. It's gonna be
Yeah, I
so
got
fast.
you.
I just don't see us being able to put everything in place in that short period of time.
And they did have here on H1 to talk about the rate structure, but I can understand what you're saying also. Thank you.
Anyone else? Okay, roll call.
Could I ask a question, Tom?
Yes,
So
David?
draft policy here with the only change the mayor made, which was 2018.
Correct,
Exactly as it's written.
correct.
So the motion is to create this tobacco policy, which will go into effect January 1st, 2018.
But no dollar amount attached to it.
No, nothing's attached to it. That will be, we'll work on that between now and then. So we ready for the question? Oh, Jenny?
Just a point of clarification. When later in the agenda, we have a rate structure on, on our agenda. So we will need to set rates for 2017, but we can wait on setting tobacco rates. We don't have to do those today if this motion passes, because you're saying that the tobacco stuff will not take effect until 2018. We have some time for that. We do need to set rates for 2017 today.
Questions? We're good? Okay.
Commissioner Stevens?
Yes.
Commissioner Carter?
Yes.
Commissioner Lewis? Commissioner Taylor? Commissioner Cassidy? Jay Pedrick?
Yes.
Phyllis Chris? Jennifer Long?
Yes.
David Merle?
Yes.
Mayor Mitchell?
Yes.
Good, guys. Okay. Heading that in good direction. As we look at H now, Mr. Cole, if you'll come back and we'll talk about structure.
Thank you, Chairman. Hope you all enjoyed your vacation from me. We ready? All right. Okay, perfect. Okay, so some of this we saw in a previous meeting, and if we're just setting the rate structure, this shouldn't take too long. The national medical trend sits between 7.8 and 8%, and then the pharmacy, it's right around 8.5%. That's on a national basis. We're still a little bit early in your claims utilization to determine what your medical trend is going to be for all of next year, since we made so many changes this past year. But so far, we're looking pretty decent. We had a tough month last month. The worst thing that we could do here is stay status quo and get back into the mess that we just got out of. So we want to stay ahead of the curve so you don't have to make sweeping changes 2 years from now or 3 years from now to try to fix a bankrupt policy. So as we stated before, we're going to continue to manage this and make sure that we work at ways to keep the fund balance healthy. So I believe a safe assumption on the early results that we've received, along with some rebates that we'll be getting, would be to set our trend level at 5%. And this just means that based on overall funding for this year, we anticipate a 5% increase, and hopefully they'll offset for any increased expenses that should occur for the next year. What that would look like would be that your current plan funding for an individual on Plan 1 is $510. That would then go to $535 for employee only. Employee spouse is currently at $1,175. That would go to $1,233. Employee child is $1,150. That would go to $1,207. And then the family rate's currently at $1,200. That'll go to $1,260. So slight increases on each. And then the Plan 2 is, again, just the difference. And it would go from $518 to $543, $1,193 to $1,252. Employee child would be $1,168. Employee children would then go to $1,226, and then the family of $1,218 go into $1,278. Again, keep in mind we had fewer than 30 elect the plan option 2, but again, this is to stay compliant and keep options available. So that is just set the overall funding rates. That is not saying at all what we're not stating here, that increase goes necessarily to the employee or to the county. So the next slides are really determining who picks up that increase. Scenario one would be that the county would pick up the 100% of the increased cost. We just made an increased cost to the employees this past year, made some changes to the health plan. It was pretty drastic. With the most recent budget that you all had voted through, we allotted for a 5% increase in the budget to the county. So this would, it covered through the fiscal year. So obviously in July, from July of next year till the end of the year, you all would have to cover the remainder of that increase. But if you were to do this, the county would take on the burden for that. So at $901,000 for the expected difference, you all budgeted for $450,000 in your last budget, which would get you through your fiscal year, and then your fiscal year, the remainder part you'd have to vote in the next 5% increase on the county commission level. So this would get you on this scenario one. Scenario two is giving the majority of the increase to Blount County at 75%, the employees picking up 25% of the difference. So the employee-only rate would go from 85 to 91.38, and the employee spouse would tick up to 214 for the employee. Employee child would tick up to 189, and then the family at 240. And then the last scenario would be if you all were to split the increase 50-50, and that would get you both at $450,000 and be an equal split amongst the three. So while we are requesting action on the rate structure, Jenny, I almost feel like we probably should get rate action on the planned funding first and then the rate structure, but we don't have it set up that way. I probably should have set it up that way.
Well, let's start with this. Does anyone have questions at this point? Okay. Next time you want to say.
I feel like it'd be fruitful to first set the planned funding, which means that you're not determining who takes on the increase first, and then at that point, pick who takes on the increase, the second level. So then you can at least have the funding level set.
So moved.
Just want to make sure I understand what the motion was for the minutes. You're making the motion, Sheriff, that we take the 5% increase to the funding as what is basically here on this screen. Okay, thank you.
So the question is, we're going to vote to take on the 5% increase in much. Who's going to pay for it? To keep our plan stable, we're going to vote to decrease the 5%.
Based on the recommendation, yes.
May I ask something, Tom? Is there anything to show us what that impact would make? I know in the past sometimes you increase it this much, this is the impact on the fund. Do we have that yet, or will we have that at some point? I hate to vote on it tonight if that's something that we could have.
In terms of when you're asking that question, are you stating projections based on current claims costs?
Right.
So the problem is we're so early in the plan. We just now are through our run out period with Humana, so we're just now starting to see credible data. So I don't know that we have enough data to be able to show you exactly based on the current trend. So that's where we're going more on, national trend, and then also looking at from our best scenario of what we can gather for the first 6 months of data that we do have. I think that it is, I don't believe it would be lower than 5%. So.
Thank you, Cole.
Mm-hmm.
Mayor Mitchell? Yes. David Merle?
No.
So the remainder would be based on the 3 scenarios, how you would want to address that 5% increase. And again, to recap, the scenario 1 would be Blount County taking on the entire 5% increase. Scenario 2 would be Blount County taking on 75% of that increase, and scenario 3 would be Blount County taking on 50% of that increase.
I make a motion we adopt scenario 1.
This is a question for Dina. Dina, we had already proposed the 5%. Did we not include that when in this year's budget?
Yes, we do have 550,000 in the transfer out for the health fund.
Okay. And that will cover from January 1, 17 to June 30th, 17.
Correct.
Okay.
Correct. At this point, the next part of the presentation was the decision between tobacco and non-tobacco rates. And since the committee has made the decision to hold on the tobacco until 2018, I don't believe there's any more of the presentation. I don't know, Cole, if you had anything else you wanted to add. That was pretty much it.
I was looking at some of the figures you have there, and it's showing that the number of people involved in the insurance programs went down 192. I'd like to know why all of those people's dropping off of the insurance program. Have we ever thought about doing a survey to see how or why those people might have left the program? That's a lot of people to leave the program. It's never been that way before. And I'd like for you all, the HR committee, to look at doing a survey to find out why so many people's leaving the program. Thank you.
Got a little bit of money left in my pocket. Do you know the statistics on alcohol use, how much greater the cost of that is too?
The alcohol? I'm
Yeah,
sorry.
if somebody uses alcohol, if it's increased, I've still got a little money left. I just might as well give it all away.
Yeah, we can research that for you, but don't have that.
Okay, thank you. No further.
We will find that for you for the next.